Welcome, everyone. Thank you for joining us for today's webinar. I'm Chinny and the VP of Marketing at Calculum. So today we hope to bring you an interesting discussion on how you and your company can better leverage and achieve efficiency with artificial intelligence and analytics in the world of supply chain finance. Now, together, we're going to cover an overview of the agenda. So Oliver, if you can actually move on to the slide of how supply chain finance, or SCF, has evolved throughout the years. Now, the programs available in the market now are always described as a win-win for both buyers and suppliers. However, when you actually look at existing SCF solutions, do we really think that they are achieving what is expected? So we'll also be discussing how you can set up and improve your existing SCF programs, especially in the challenging economic environment that we are in now. And of course, and most importantly, we'll address how you and your organization can utilize innovation to gain competitive advantage in the market today. Next, I'm going to tell you a little bit about our presenters. Now, they're both subject matter experts within the industry with more than 35 years of combined experience. Steven, having worked at ING and Capgemini, is the founder and CEO of Capital Chains, a Dutch-based consultancy that specializes in working capital and SCF solutions. And Oliver is an established thought leader and author in the world of supply chain finance. Now, he's worked in Prime Revenue at Sumitomo Bank, so he's also the founder and CEO of Calculum, a data analytics company. And at Calculum, we aim to help you and your company unlock free cash flow by optimizing and negotiating better payment terms. Now, lastly, before I hand it over to Oliver and Steven, just a little bit of housekeeping. Now, if you have any questions, please type that into the Q&A box in your Zoom panel. The functionality will be available during the presentation, but we will also have time for questions at the end. Now, in addition, this webinar will be recorded and shared after the event. And without further ado, I'll hand you over to Oliver and Steven.
So yes, thank you, Chini, and thank you everybody for joining today's session. So in order to get started, let's start explaining also what we mean by supply chain finance and what solution are we covering in today's webinar. So the official definition, which was done a few years ago by the International Chamber of Commerce, the ICC, says like it's a use of financing and risk mitigation practices to optimize the management of working capital and liquidity, such as cash flow, in supply chain transactions, which are typically around open account. Now, obviously, there are a few variations depending on who is the anchor company. So is it the seller or is it the buyer? Are there one-to-one solutions, like one party working with another party, or one-to-many? So for today's session, we will focus on supply chain finance, where one buyer as an anchor sets up a financing program allowing to optimize their payment terms and unlock working capital, while helping many of their suppliers access early payment terms. So to this leads to the next points. Why is this an important topic? And I know, Steven, you want to cover some of the points?
Yeah, so also from my side, so welcome everyone. Why are we still speaking about supply chain finance? We were doing it, let's say, a couple of years ago, primarily on extending terms. Today, the discussion is far more wider. It is still about terms of optimization and being able to look at your own, let's say, internal liquidity. So from a corporate perspective, cash is king is still true, even more so today with rising interest rates. And the second point that is being added to it, so given the focus on supply chain risks, we've seen many corporates, especially given the pandemic happening, refocusing on who are my suppliers, where are they, how do I get the stuff that they're producing to my production locations, and how do I get it from where I've produced it to my clients. And then in line with that, there's new technologies. So we see fintechs that are developing new models using artificial intelligence, who are using big data or data analytics to determine how you can finance, who you can finance, when you can finance. And as part of that, the solutions that, let's say, Oliver's company and my own are using is key to developing better supply chain finance models.
Okay, so look, it sounds all great, correct? The market is growing. There's a lot of demand. The timing's perfect. And it's a win-win for all the participants involved, such as the buyer, the supplier, the funder, the platform provider. However, some of you may experience that when looking more closely at supply chain finance programs, not all are really successful, or some of them have just reached the initial planned volumes and onboarded suppliers. So today, really, we want to look at what are the key challenges, why some programs have not achieved that, and obviously for the newcomers, for companies, but also banks, service providers which want to enter the market, to give them an overview about where to really be careful on the pitfalls and then the challenges. So let's start with the first set of challenges. Steven, do you want to pick some of them, and then I can also follow up?
Yeah, so I think part of this is around what is the objective of the program that you're offering, and whether that is as a buyer or as a bank, you need to consider who you're offering this program to. So what we see quite often is funders going after the wrong buyers. And the wrong buyers isn't necessarily that it's a wrong company, but it's the wrong company at the point where they're at. So they'll focus on a company that is acting on a global scale, whereas the funding party is mostly active within one country. That's nice. From a business case perspective, it looks very promising. In the end, it's really difficult to convince them to work with you. And then you've spent a lot of time going after this client who ultimately then not decides to go with you. Second thing in that same space is the misalignment of management. So the clients that you would speak to, or the corporates that you're working in, someone may be super interested in supply chain finance, and someone could be treasury who says, hey, it's an opportunity for working capital optimization. But then they're not followed up by the alignment with IT, or the alignment with procurement, or the alignment with other functions, or even, let's say, other strategic visions that are happening at the same time. So making sure that you are going after the right clients is critical there.
The other one I would say is more down the road is some companies, when they set up the program, they're looking mostly sometimes at selecting first a partner and then looking at the structure. So there are different structures you can use, like you can set up your own program with your own platform. There are very few cases like that, but there are. Mostly buying organizations use a bank-led structure where the bank is funding and also providing the platform. And then there I saw many times the situation where it works very well if you work with, let's say, a regional bank and your suppliers are in the same region, the same country, the same currency. But then, to your point, Steven, what about if your supply chains are global in nature and you want to expand? You want to add countries which maybe this bank cannot support. So there are two options. Are you setting up another program with another bank on their platform? Then you have suddenly two different structures. Or do you use a multi-funding structure with an independent provider? So these are very important questions to be answered and looked at the beginning when looking at your portfolio and what you want to achieve.
And I think in that sense, you can also speak about the different agendas and goals that you have, right? So if you're going after a big bang approach for the largest suppliers, that would be different and a different need from whoever you're doing it with than if you're going after securing suppliers or securing supplies coming out of specific countries far away that may actually be provided by smaller suppliers, not necessarily in the initial scope of the partner that you chose to work with. And in general, what I've seen working with banks and let's say corporates is the project-based mentality. Now it is indeed a project, right? You have to set it up, you have to implement it. At the same time, it's not a project in itself. It should be in the DNA to continuously monitor how do we do business with our supply chain partners. What are the terms that we've agreed on? And we do that on prices, right? It's an ongoing check and balances against what's happening in the market, what's the market price, what do we get, versus working capital, where it's like okay, we did this, we ticked off the box, we've been able to add a couple more days to our days payable outstanding, on to the next. Whereas actually we need to do that on a continuous basis, which means that we may either be able to extend them in subsequent phases, or have to reduce them because the market is moving somewhere else and we need to follow the market, or we need to provide something else. So that project-based mentality is really great if you want to start it off, but then it needs to progress into, okay, this is part of our business as usual way of working, and cash flow forecasting and cash flow management and liquidity management is key in doing business on an ongoing basis.
Yeah, I agree with you. And then let's move to the next slide, because again, to this project-based mentality is the point, as we all know, when you achieve, if your goal is cash flow, free cash flow with a supply chain finance program, it's a one-off, correct? So it means next year you have to further improve your cash flows. Again, looking at payment terms, maybe working with additional suppliers. And to your point, payment terms are not static. In many industries, payment terms are changing over the next 2-3 years. So you cannot just do it once as a project and then leave it for the next 10 years. So you have to constantly address that question about cash flow and payment terms in general for different industries, different commodities, different countries. And that this leads to, I just pick up the point here on the top, like designing a program. So when you start a supply chain finance solutions, many organizations, or also banks and platform providers, they are not spending enough time on designing the program long-term. So with the specific goals from not only treasury, but from procurement, such as, I don't know, can it be cash flow, earn discounts, or combination of both, in what time frame, what are the specific suppliers or groups of these segments you want to follow up, and also then constantly reviewing the results and adjusting the targeted suppliers accordingly. And I think this is done not sufficient, and there's a lot of room to improve.
And I think, let's say, a natural consequence of that is that quite often we're looking at it from a one solution mindset. So we come in, we set it up, and we've agreed on payables finance. And that's it. And we just leave it there. Whereas actually, if we do it right and we use all the data available to us, we're going to progress from payables finance to, hey, you know what, actually, if we want to further optimize our working capital for the corporate, or we want to optimize the working capital situation of the suppliers, why don't we now grow into purchase order finance? We have all the data, we know all the suppliers, they're on the platform, we can start small, we can build from there. And that actually makes supply chain finance much more like an approach, like a living organism, that you start off small, you feed it, it becomes bigger, and at the point it becomes mature in one solution, you kind of naturally progress into the next solution that will actually help that supply chain to become more efficient as we go along. What that means, though, is that we need to have very close collaboration between the different departments. It's no longer just, and we said that on the previous slide, it's no longer just a treasury game where they can optimize working capital today. It's that knowledge of procurement of who do we do business with? What do we know about them? What are their needs? What are their needs beyond just getting a good price and big volume? How can we make sure that the terms are in line? What's happening in a country? And I think to that extent, we really need to know more about the suppliers. And Oliver, I think you are best placed to discuss that.
And then maybe looking a little bit further down the road, when you have mandated a partner, you have decided to start a supply chain finance program, most people don't realize that actually you have to sell supply chain finance at least twice. First to the buyer, correct? Internally, the organization, but then it's not just like, okay, done. The technology, the financing does the rest. No, you have to negotiate and discuss it with each single supplier. If you want to optimize your payment terms, you have to negotiate these terms with the suppliers. And this is done always before mostly financing is offered to the suppliers. And this leads to the next point is because it's not a simple task, and mostly this negotiation is done by procurement and sourcing people within the buying organization. And the challenge is there that mostly these programs are run and initiated by Treasury, but then procurement actually have to negotiate these terms, and they don't have enough information. They don't have enough knowledge because they are very good at buying the best quality, best volumes, the best pricing, but they don't have the specific information around working capital, trade ratings, weighted average cost of capital, funding costs, all this information, which is really relevant when having the right argumentation to negotiate these payment terms. And this is where I saw in the past a lot of programs fail because procurement is not fully involved and don't have enough information to negotiate these terms.
And I think typically the fear there is that if they start negotiating with their suppliers based on the wrong information, they're going to get it back on price. That's their fear. And you need to provide them with the right information so that you can actually make a mathematical equation of what does it mean. So for one of the clients that I'm currently working with, financing cost was a big issue until you start to calculate it back and say, okay, so what does it mean on a ton of whatever material we're buying? Oh, it's only that much. Okay, but the supplier is never they're not going to retaliate against a couple of cents. But that was actually what we were talking about. So being able to put it into perspective of a buying organization, of a supplier who will be offered this, let's say this solution, making sure that it's not just a numbers game, but also put in perspective of, okay, what does it mean in terms of me doing business, is quite crucial there.
And the last point I want to highlight is, which leads to kind of the solutions, is that in many cases, companies are not aware how much resources they should apply to that to make it really successful. So again, this leads to the previous point about the project-based mentality. So you need internal resources and resources to analyze your spend, to negotiate the terms, to design the program, to have everything aligned. And mostly we see that they just have the resources to really scratch the surface in terms of the results, in terms of the benefits also offered to the suppliers. And this is where I think, Steven, your solution can bring a huge opportunity, a huge help for not only corporates, but also the banks, the technology providers. So let's have some minutes about learning more about your solution.
Yeah, so I think if we're to summarize what we do with the solution that we're offering, right, it's creating alignment in a standardized way, so that for corporates who are looking into, should we do supply chain finance? How should we do it? Where are we today? We enable them to score themselves on their corporate strategy. Do we have a clear vision of where we're going, why we're doing it, and what we try to achieve with it? Second point of discussion always should be the organization. Who are we going to use internally? Are they aware of it? Do they have the right skill set? Do we need to provide a training on supply chain finance before we even start to speak about it? Process-wise, how are we currently organized? So you'll find that many corporates have multiple systems. They don't know where all the information is. The processes may differ from one buying organization to the next. Can we streamline it? The technology piece of it. I mean, everyone knows that ultimately you want to get, for the simple product of approved payables finance, you want to get the file which says invoice ABC will be paid on that date for this amount to this supplier. Can we get that information? Is it a big project in itself? From where I stand, we would always say it's fairly simple, but fairly simple is typically very overcomplicated if you don't know what you're doing and why you're doing it. So make sure that from the get-go, you've got a clear overview of what are the technological needs. KPIs. How do we incentivize our people? Are actually the right KPIs in place? It's really annoying to find out down the road that the KPI is set in such a way that there is no incentive whatsoever for a procurement person to work with you. Or from an IT perspective, where they say, well, I need uptime and this is going to reduce my uptime, I'm not doing it. And then the final point from a, let's say, segmentation, or sorry, alignment perspective is the segmentation. Do you know who you'd like to offer it to? And we'll come to speak about how you can do segmentation in far more detail when Oliver speaks, but creating a high-level segmentation. Where are they based? Who are they? What's our 80-20 rule? How many suppliers do we have? What are their needs? By standardizing that approach, it allows us to provide very easy and accurate insights for a corporate so that they can very quickly analyze where they are and what, let's say, the next steps would be for them. And at the same time, for banks offering this service to their corporate clients, it allows them to get far more insights in where are each of the individual corporates. And based on that internal alignment, we can create the business case, we can quantify the potential benefit, and from there on, everyone can decide whether they should continue. If you are that corporate, getting that, let's say, alignment piece allows you to internally allocate the right resources, because if you know where the gaps are, you know what to do next, it's much simpler to get from, hey, I'd like to do something supply chain financing because I heard about it, to this is how we want to do it, this is what I need, and this is what it will bring us. And that can still be on a higher level, but at least it allows you to speak far more concrete and allocating the right budget. And then in subsequent stages, you can also go out to the market and say, hey guys, this is what we're looking for. This is how it should run. This is our landscape. This is what we want to achieve. And if you are a bank or a fintech pitching for this business, it will also be far easier to say, and this is what we can do. This is where we add value. Now, if we move
and I guess, Steven,
sorry.
And I guess, Steven, if you do that at the beginning, obviously you spend some time but I guess once you have everything lined up, then setting up the program and managing is much faster, correct? There's much greater results.
Yeah,
so investing at the beginning makes sense.
We make the promise that we'll save between 30 and 40% of the time from I'd like to do it to actually setting it up, but just by having a solid approach to it.
Yeah.
Now, this is the piece that is more focused on the funders. So let's say supply chain fintechs or banks. One of the things that we see for many banks is they have a difficulty speaking to the right clients. So they'll have a large amount of prospects in their portfolio where we can help them with this standardized approach to ask the right questions so that as a funder, you also know whether they're aligned or not. You know where they have issues and whether you can actually help them to overcome them, or whether you should step out and say, call me back when you've got your new CRM system in place. The second thing that our solution helps you with is selecting the right clients, because now that we've mapped them all on the same criteria that you can tailor when we set it up, you will get something like the picture above. The size of the bubbles represents the financial opportunity, but you'll see that clients are in different segments. On the bottom left, they're really big at this point, but they're not ready. They're not necessarily a strategic fit to your operations, what you'd like to do. The bottom right, you might want to refer them because they're ready, but they're not your type of clients. Top left, you want to nurture them. They're not ready yet, but they're a perfect fit for your solution tomorrow, the day after tomorrow, next year. And the top right, they are the clients that are ready, that fit your criteria. And that brings me to number 3. It's actually going to help you reduce your sales cycle, because instead of spending time on the clients on the bottom left, because their potential size is really big, you're going to lose out on all of the opportunities on the top right. Whereas if you focus on the top right, you can implement them tomorrow. They'll be ready the day after tomorrow. They'll be live and up and running and making you money, let's say next week. And then you can focus on the next set of clients that weren't that ready that you can do tomorrow. And what we actually want to make sure by doing this is that we see an accelerated adoption of supply chain finance solutions. Rather than speaking about it lengthy, we want to make sure that it actually brings value to that supply chain, utilization on the funder side, value to the suppliers, value to the corporates who are in the real economy.
Very cool. maybe now moving to another quite new solution in the market. It's the ADA platform, which we developed during the last years based on all the experience we have in setting up and managing these supply chain finance programs. And it's really based on, and I will show you today a quick demo on different modules, which follows the kind of journey of every client when they are setting up this program. So first, obviously, you want to compare yourself as a buying organization, where you stand versus your peers, and benchmark yourself. Once you know that, then you want to analyze your spend and every single supplier, and you want to see where you should concentrate your efforts. Like, are they the top largest volume suppliers? Are these suppliers where you have the largest leverage, the ones where you have the rate arbitrage effect? So you can really see the big picture based on all the spends you have from the different ERP systems to see where you should concentrate. Then once you know the potential, then the next step is to really create a program and simulate the effect. And I'm still surprised how many corporates, but also banks, they start a program and they don't even know what is the potential revenue for a bank or working capital they expect to achieve. So there is no calculation of what is the potential that these suppliers will join the program, will accept the new payment terms, will trade the receivables. So this platform, which is based on almost now 800,000 suppliers on the platform, really provide these insights and where you can start a program where you have already a clear set of goals, and this leads to the next point where you can create a plan where then you can collaborate between treasury, procurement, which mostly we see also as a problem which never happens. So they can work together on the same data set. Together, they can invite a bank or a technology platform provider where they can define a plan where they can say, phase one, we go after, I don't know, our suppliers in the Netherlands or suppliers in a specific category. And then we look at the milestones which have been achieved versus the plan. And obviously the last point is all the information required to negotiate, all the argumentation required to really create the benefit not only for the buyer, but also to invite the suppliers to such a supply chain finance program. So before I show you the platform, just very quickly, the platform is fully automated to the point before what we said in terms of limited resources. So today, the platform, the latest, what we have done is analyzing 10,000 suppliers within 24 hours. So it's not just like the top 50 suppliers, it's your entire supply chain, which allows you not just doing a payables financing program, you can do a dynamic discounting program, or just use the information to be more competitive and apply better payment terms. The platform is fairly simple. We only need 6 data points. So we need to know who is the buyer, who is the supplier, the volume which is purchased, the currency, and the actual payment terms. And the platform does the rest. And all the data is fully anonymized. And the pricing is very simple. It's a subscription-based pricing where you can buy seats, where you can invite treasury, procurement, and you can load as much data as you want and analyze as much suppliers as you want. And again, it's not a project, it's a platform where you have constantly throughout the year access for new suppliers, for existing suppliers, where you can constantly mark yourself to market on the development of new payment terms and compare yourself. Are you in the standards of a specific industry or commodity or country? So let me quickly show you the platform. So this is a demo account. So the first step, as I said, I'm just logged out because of time. Let me just log in back in. So the first step, as I said, is where you can compare yourself based on different working capital metrics versus some of your competitors, where you can select here, or you can select different peer groups where you want to compare your organization with. Then the next point, very important, once we get the data from the clients, then we need to match it. So we need to clean the data, which is already a service which we provide, which basically We update if there is a new address, or we correct the supplier names, which is very important. Usually the matching rate, the automatic matching rate is above 80%. And then what I said before is, this is a very small set of suppliers, but just to show you, to see what is kind of the concentration, the distribution in terms of buyers, in terms of geography, where is my spend located? And also very important to automatically analyze the risk and the rating of each single supplier, which is then also used as a proxy to estimate the cost of financing, the weighted average cost of capital of each single supplier. Now, once you know what is the potential and the distribution, then is to create a program. So you can create different programs for your strategic suppliers, for your tail suppliers, for suppliers. Maybe you want to apply ESG or a sustainability project for specific suppliers. So this allows you to simulate and really actually plan ahead what is feasible and how much cash flow you can achieve or discounts. And then to close the loop is you have to have all the information, not only on a portfolio level, but on each single supplier. So this is, for example, an example here where you have a supplier where it gives you an overview about who is the parent, what are the different spend, the different subsidiaries, and if there are different payment terms per these different suppliers in this group. And also, as I said before, rating not only the supplier, but also the parent company, looking at financial metrics, looking at ESG scorings, where we work with a partner called Investverte, looking at country ratings. And then most important, as we mentioned before, is you have to negotiate these terms. So this tab really allows you, if I go to this spend, for example, to look at, okay, my current terms are 14 days. The platform, based on all the data we have, suggests to move it to 60 days. And these are the argumentation, the reasoning why you should move these terms. So this can be the DSO of the supplier. This can be the different suppliers, the subsidiaries belonging to the same parent, what terms you have with them, or the peer group average. So similar suppliers selling similar commodities to similar customers, what is the average which the platform has found there? And also regulatory terms. So looking at different laws in different countries. And to make it even simpler for procurement, to create a script which goes step by step explaining what you should say on a phone or in a meeting to convince your counterparty to achieve these new terms. And at the end, to enter these results here, where then Treasury, the finance department, they can track it and they can really see the milestones versus the plan for each single program. Okay, let me switch back to the slideshow. So we're almost at the end. So Steven, to you, maybe, so if you're a corporate or a bank, what should be the next step if you think like, okay, I want to start a program, or I'm looking at an existing supply chain finance solution and I want to expand it?
Yes, I think, first of all, there's a question on how this worked for a company and what's the typical process, and that fits in quite nicely with what should you do next or what could you do next, right? So it's never an easy program to set up supply chain finance without having any former experience in doing it. So I think what everyone would need to do is review where you currently are. What are some of the opportunities that you've heard about others doing? What are some of the options available? So look at that. I think in general, it would be really good to make sure that you invest a little bit of time in what is available to me. Who are some of the potential partners? The reason why I say that is there are so many parties out there. You want to get a little bit of a feel for what's available. And then from where I am, I would say get aligned today and book a free consultation with us, because we can take you through that. Hey, we're thinking about payables finance. This is what we're facing. We can very quickly identify, let's say, where you are in terms of your journey, and we can help you go through that alignment phase and effectively help people get from, I've got no clue what I need to do, to, hey, I've got a clear guidebook of this is what I need to do next. and this is how it's going to work. And in my experience, that is also what really benefits the corporate client, because typically they've gotten the task of, we need to achieve X, Y, Z. We think supply chain finance is the way to go. And then it's on someone's desk, and now it's your responsibility. So making sure that you understand what you could do, and then finding whoever can help you with that is typically a very good starting point.
Yeah, and for us, it's all about the data. So even if you know you want to do it, you have found the partner, the structure, but at the end, you really have to analyze the opportunity. And it has to be aligned with your goals. And you can only do that by really reviewing your spend, reviewing your suppliers to see if are you aligned in terms of the payment terms with the market? Are you already a top performer? Or is there a huge gap between you and your competitors? And this is only revealed by analyzing each single supplier and looking on a portfolio level what is achievable in what time frame. And again, to do that, there's not so much data required. We can leverage our database to provide full insights and give you an estimate what is achievable in what time frame with what type of suppliers.
And I think to add
anything
to that,
else you want to add? Yes.
Yeah, I think to add to that, unfortunately, I've had the experience of going through creating the spend files that also will feed the Calculum platform, right? It's not always as easy as it seems, where you would say, just download the data, you get one file, you upload it somewhere else, and you have all the insights. So to make sure that people are aligned on why are we doing it, it's really critical to get that initial buy-in from the various departments. Hey, we're doing it because we can achieve ABC, and that ABC is A, treasury, B is process, and C is for procurement. But then when you go to IT and you say, hey, we need your support in getting this extract, they can actually help you. If you go to C, who was in my example is procurement, they know why you want to do it, and they'll review it with you, because you can have all the insights on pure names, but they can give you that coloring and say, hey, but they're actually supplying us with this commodity, which you can't see from just the invoice data. And I think it's nice to mention here that we actually had let's say an opportunity together where I was helping the corporate, where really getting that insight is critical for them to be able to move from, hey, we'd like supply chain finance, to we have that buy-in. We now understand that if we provide this data, we can actually do it. And that goes back to some of the questions. How do you help procurement to be confident? It's to provide them with the right data and to provide it in perspective. I said that somewhere in the beginning, but to make sure that we're not just talking about bips and margins, but we actually speak about euros in relation to, hey, we're procuring something worth 300, but we're adding 10 cents. Okay, that's small, right? We can look at that. So I think that really helps.
Yeah, and then maybe specifically on existing programs, some of you which are in today's session, which have experience with supply chain finance, I'm sure you heard about what is going on with the Financial Accounting Standard Board, the FASB, about the potential new disclosure. Are you in line with the market? So it's also very important that you're not just looking in your four walls with your suppliers to apply the payment terms, but really to look at what is the market standards for a specific commodity, for a specific country, industry, and see also your competitors. Are you in line? Because if not, then you can improve it. Or if you are top notch, then maybe there's a very small opportunity with supply chain finance and you should not push too much. So again, the analytics, why we are here today, the segmentation and the review of an existing program and also new setups is very critical to avoid these challenges which we mentioned today. So I think we are already at the end. Sheeny, back to you. Are there any questions which came through the chat?
Yeah, I think basically there are a few questions that came through that yourself and Steven has actually picked up and answered live. Let's see if there's any more. Yep, we have another one, and we have found the biggest challenge in SCF is convincing buyers. What is the most compelling issue for buyers to get involved? Extension of payment terms to suppliers seem to be the only real benefit here.
So, so to convince buyers, it really depends on each single organization. Normally, how I start a conversation is not just focusing on the solution. It's more looking at what are their goals. Is the goal to use free cash flow basically to pay back shares, for paying out dividends, for acquisitions, for investments, or is it securing the supply chain? So basically supporting some of the suppliers, or maybe just recently there were some programs focusing specifically on sustainability goals where they want to offer them early payment terms to the suppliers in order for them to make improvements in terms of ESG. So it's really looking at the high level goals to then use supply chain finance as a way, as one solution to achieve that. Yeah, and some of them can be working capital and cash flow. And again, how to convince them is to really run a very quick analysis and show them what are the results, what is the potential they can achieve. I know, Steven, do you want to add anything to that?
Yeah, maybe
how to add to that a buyer?
Mm-hmm. Is the working capital gain is always the number one reason why companies start with it in the first place. They look at it and go, yeah, we can free up working capital. But it's a one-time thing, right? If I do a program today, I'm going to get the working capital gain today, and that's it. So on an ongoing basis, what you actually see that while the initial terms extension was a nice achievement, the ongoing process of optimizing process flows, optimizing the collaboration with your suppliers, ensuring that you've got even more leverage in a negotiation, which goes beyond, hey, we're paying you this price, but it goes, hey, we're actually trying to grow. We want you to grow with us. We're on this program, thereby alleviating some of the pressure of supplier limits that they may have on you, becomes a far bigger story. And then and I think that is where it moves from being a project-based approach to it's part of how we do business. Yes, we need working capital. We all know that. We also all need to make money. How can we do that in the best way? And I think, Oliver, you mentioned sustainability. A couple of years ago, every conference you went to, it was about blockchain, right? And we were all talking about blockchain. The good thing actually about sustainability to me is this is a fairly easy way of getting insights in who your suppliers are, in trying to convince them to join a program, in being able to play around with the terms. This is actually quite tangible. Yes, ESG is not just a faraway show. So while we start with that working capital, ESG is like a natural inflow. Hey, we've got the data. We know who they are. We've got more information. How do we do that? How do we do all of the reporting? This may actually be one of the answers that comes very natural.
Yep.
Very good. No, we pretty much looks like we've covered all our questions. Is there anything else you and Steven want to actually cover before we do a wrap up?
No,
I would just encourage everyone, if they still have a pending question, to type very quick so we can still answer it today.
Yeah, or we can also follow up. You have our emails here to contact us. So if you have any question specifically on if you are early in the journey of looking at supply chain finance, setting up a program, or if you are a bank, a technology provider, looking at supporting your clients and requiring the data to support that, then please feel free to contact us with any question. Happy to help you. Actually,
we have two more questions that just came in. We have time for that. Will we go through it? So
sure.
There's a question from regarding, is your solution catered more towards banks or corporates?
Maybe I can start. because maybe it's not so obvious, but the platform I just showed before is we provide a platform to two groups. One is the corporate buyer for the treasury and the procurement internally, but then also we offer that platform to technology fintech providers as well as banks, because the key reason is, first, they're competing against other banks and other fintech platform providers. As we all know, supply chain finance is a growing market. There's a lot of competition, and mostly or always how it's done today is they just present a nice PowerPoint where maybe they have analyzed 50 suppliers, because again, it takes a lot of time and it's done manually today. So they use our platform today, these banks and service providers, to first be more efficient, reduce time, analyze the whole portfolio of suppliers, and present a platform where they can simulate directly in discussion with the treasury or procurement team instead of just showing a PDF or PowerPoint. And then the second way how they leverage us is to really generate faster the results by providing all the information to the procurement people, by setting up plans and programs, working together in collaboration between treasury and procurement. And these are the main reasons why we not only sell to corporates, which is, I think, obvious, the benefits, but also to banks and fintech companies.
Yeah, and I think a similar answer for me. So the tool to assess the alignment and let's say to create the automated reporting on where you are and where you need to be is a service offered to corporates. But then on the back of that, the aggregation of the individual corporates who've gone through it for a bank is where they get the insights on who to focus on today and who to focus on tomorrow. So we cater for both aspects as well.
Thank you. And then we have a question from Julio, who says, how is actually artificial intelligence actually involved in this?
So from our side, there are different aspects. So we are a data company. So we receive a lot of data in terms of spend and payment terms. So how we use it, as I mentioned before, all the data is anonymized. However, every company in our database, meaning the supplier, we're using their characteristics of a company. Let's say how large or how small is the company? What is the leverage between the buyer and the supplier? What type of commodity are they selling? In what industry, in what country are they? What is their credit rating or credit scoring? And other aspects. So there's about 12 different aspects or characteristics which are fed into the platform. And when the platform receives another company in a database, which very similar characteristics, it makes the link and feeds the engine saying like, hey, we found a similar company, or we have a group of companies which sell similar commodities, they're of similar size, and they're based maybe in similar countries or regions, selling to similar customers as yours. And these are the standard payment terms today, and you are here. So we clearly show where you stand as a buyer with your supplier in terms of the standard terms applied in this industry or in this commodity. And then obviously the second point, once you negotiate these terms, we always say we are the science, or the platform is the science behind that negotiation, but the art is the negotiation and the relationship between the procurement people and the supplier. So we don't know your specific relationship. Is it good? Is it bad? Are you always paying late? How long you know the counterparty personally? So all these data points also play a role in the negotiation, and actually the platform learns from that based on your successful negotiations with your suppliers and what the platform has suggested versus what you have achieved with each individual supplier. This is how we leverage AI.
Thank you. Well, all the questions keep coming. So I think we have time for one more question. But don't worry, if we can't answer your question today, feel free, we'll actually reach out to you after the webinar. So one last one from Mike. Are you guys invested in any fintech platforms that could cause a conflict of interest with a tech provider?
No.
For us, and I see, Steven, you have the same. It's the first time I work for banks, for platform provider, like transaction systems. And for us, it's the first time where we're not competing against nobody. It's why today we are sitting here together, and yeah, we can work with anybody because we provide additional value for banks, for platform providers, and for buyers and suppliers.
And the same goes for us. The insights could be used by anyone, and you can still tailor them and say, well, I'd like to ask specific questions on specific points that are different for me than they might be for someone else. But we're completely agnostic.
So thank you, everyone. It really looks like we're running out of time now for all the questions. But as I said, don't worry, drop us a note into the Q&A and we'll reach out to you. And before we go here, we have Oliver and Steven's contact details again, so feel free to reach out.